بسم الله الرحمن الرحيم والصلاة والسلام على سيدنا محمد الصادق الأمين وقل رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقه قولي اللهم علمنا ما ينفعنا وانفعنا بما علمتنا يا أكرم الأكرمين. Shall we start our class with Surah Al-Fatiha? بسم الله الرحمن الرحيم. Okay, please everyone mute, put your device in mute status so we can have the session without interruption. And if you have any questions, then later on I will end of this session you can open the mic and unmute yourself and you can ask and lay down your question. Okay, audit evidence and audit documentation, and we need to know what is the evidence first. If we know that the evidence come to prove something, isn't it? To support something, you are saying something, or the lawyer come and say this claim this man is guilty, so he should bring evidence. Okay, so the evidence is kind of supporting document or supporting video or supporting witnesses to prove something, to prove the claim. Okay, so this is the kind of general definition. So identifying the 4 audit evidence decisions that are needed to create the audit program. So we have, this is one of the learning outcome for today is to identify the 4 audit evidence. We will discuss what is those 4 evidence for decision that the auditor need to decide regarding the audit evidence, which will shape and form the audit program. First, we need to know what is audit program. Audit program called also audit plan, and it is kind of action plan. What the auditor do, what the auditor will do in terms of documents and collecting the evidence and running the test through here, and how many times, samples and efforts the auditor need to do, and all of that. It's, we can call it action plan or the audit program. So documents what procedures an auditor will follow to validate that an organization is in conformance with the compliance and regulation. So what is the 4 decisions that we discussed just now? I mentioned the first one, which audit procedures to use. So what is the audit procedures to use? That will shape the type of evidence, type of audit evidence. The second one, what sample size to select for giving procedures. The third one, which item to select from the population. Fourth, what when to collect this evidence. So in terms of timing. So we have these 4 decisions should be clear and should be decided by the auditor when they collect the evidence, because if, let's say, we decide to collect the type of we will use the procedures that related to physical examination, so that will shape the audit evidence. Audit evidence, now we need to have physical visit. The auditor should go in person to the, let's say, to the warehouse. So that will shape the audit evidence. Next is the sample size. If the auditor decide small sample size, then the evidence, the audit evidence will be less. But if we decide as an auditor to have bigger sample, then we will have bigger audit evidence or more audit evidence. Number 3, item to select from the population. So also that one will shape the audit evidence. The timing, because we mentioned in, I think, in early time that the auditor may start his auditing procedures throughout the year, and they will have the time of issuing the financial statement in end of the accounting year, which is 31st of December. And then we will have another 3 months to check the subsequent events after the issuing the initial statement until the point of submitting the auditor opinion or audit report. So all of this time, all of this frame of time, the auditor should decide when to collect. And normally, if we are testing, collecting evidence related to the internal control, we will we will have it during the year, maybe during August and forward. But if we are looking for substantive tests related to details of balances, so in that case we need to get the financial statement first. So it will be on after the issuance of the financial statement, and so on. Okay, so we go forward. So audit program, it includes a list of audit procedures that the auditor considers necessary. And this audit procedures is related to time, sample size, items to select, timing of test. And later on, we will see these three items: the sample size, item to select, and timing of test in the next chapter when we discuss the audit plan. So bear in mind those three items, which is shaping the audit program or the audit action plan. Next is most auditors use computer to facilitate the preparation of audit program. Normally now we have the audit software, so the audit software will be prepared using the computer audit software, which assess the auditor in terms of the assessing or determining the appropriate sample size, which item to select, and also the appropriate time. So this is a kind of demo system of one of the audit program issued by one of the software. So let's say discuss the nature of evidence. Audit evidence is made up of underlying accounting data and corporating information. So from where we collect the audit evidence, we collect it from the accounting data. What do we mean by accounting data? We means all of the other recording, accounting records in terms of the journals, general and subsidiary ledgers, and various other records such as the worksheets, which all support the cost allocation and bank reconciliation and so on. So when we say that the accounting data, we means all of the recording, all of the accounting records, either journals or the ledger, and as well as the the financial statement, trail balance, the cash flow and balance sheet, and so on, and other supporting documents related either from the bank reconciliations, invoices from suppliers, invoices to customers. All of that are supporting documents. Consider one of the evidence that we auditor will refer to it as natural or audit evidence. Okay, so we need to discuss something. One issue is related to the persuasiveness of evidence. What we mean by persuasiveness of evidence, first we need to understand what is persuasiveness. What does it mean? Persuasiveness means how convincing is the evidence, how acceptable is this evidence, and there are two main element for the persuasiveness of evidence. One is appropriateness and sufficiency. We will discuss in details. So the appropriateness means the it's related to the relevance and reliability of underlying data and incorporating the information. Means how relevant is the data or the evidence and how reliable is the evidence. And then sufficiency. Next is sufficiency, means how much we need to collect in order to have persuasive evidence. We need to have relevant and reliable evidence, and also we need to have sufficient evidence. Example, let me give you example. uh, let's say we have one of the student, they said they found one or there is one ROMAS saying that there is one case of COVID-19 in let's say in we give example in, let's say, in Shiraz. So now we need to ensure this evidence is relevance. We need to find evidence is relevance. How we get relevance evidence? We need to find someone from Shiraz. He's who is relevant to that area, and then we need to ensure that person is reliable. How to ensure that it's reliable? It should be an authorized person, maybe the police, maybe the hospital, and so on. So that's reliable. Okay, that's about appropriateness. So let's say sufficient. Is one, should we rely on one side or one person to deliver the evidence, or should we call another person to confirm? So the more or the multiple sources of evidence is the more sufficient is the evidence, and that will be reflected to the auditing process. Because if we collect uh, evidence related, let's say, about one transaction, we need to confirm this transaction is happen. So we need to collect to check the customer invoice. That is one of the evidence that we sell this company or the client company sell to the customer 10,000 of items. So that is relevant evidence. But how reliable is it? That is another question, because since the client company is the one who issue the invoice, so it is less reliable. So we would prefer to conform with the customer. It will be more reliable if we conform with the customer. Sufficient, by calling the customer and checking the invoice, checking also another file like the credit, the account accrual, account receivable of of that customer. That will give us more and sufficient evidence to come to the conclusion and use that audit evidence. There are 6 characters of reliable evidence. One is the independence of provider. We have either evidence that provided by the client company that we are auditing, or the customers or suppliers, or we can call it business related parties that dealing with the client. So if it is from bank, from if the evidence come from the bank, like bank statement, come from the customers or come from the suppliers, it will be more independent. So the one who provide the evidence is the independency of the providers is one of the characters of how reliable is the evidence. Next is the effectiveness of the client internal control. So if the client internal control is strong, and sufficient and effective. So we consider the evidence that provided by by that client is reliable. However, let's say the company is using pre-numbering invoice, and they use computer generated invoice through the software, accounting software. So it is more reliable since the internal control of they are using the internal control in terms of documentations and so on. But let's say they have manual handwriting invoice, so that is not effective internal control. So in that case, we consider the internal control is less effective, and that will affect the reliability of the evidence that we collect. Third is the auditor direct knowledge. So it is about the auditor knowledge about the client, about accumulated information or experience from the previous years. So the auditors have the direct knowledge about this transaction and this client evidence, so it will affect the reliability of evidence. So I give you example. Let's say in the previous year we get experience as an auditor that this client has problem or issue of non-segregation duties within the let's say within the accounting department. So in that case, we consider less from our experience, we consider the reliability of evidence is not that effective. Number 4 is the qualification of individual providing the information. So especially in the accounting departments and those who are dealing with the accounts and dealing with the system. If they are having experience and qualification in accounting and finance, so we expect that they know what they are doing. We expect less errors, less mistakes, either intentionally or for sure it is errors is about unintentional. And then number 5 is the degree of objectivity. Means we if it is internal less bias, who the one who provide this evidence. So I give you an illustration here about the degree of objectivity. If we done the if we done the if someone else provide this evidence, not the, let's say, the accountant, the one who provide, so he will bring you the same information, so less it is unbiased. But it's about biasness, it's about biasness. So it means that this person, the person who provide this evidence, he is not reflecting his own interest into the evidence that he provided, either the accountant or the managers and so on. Then the timing of the reliability. So let's say I send a request from the management that I need to visit, I need to get the minutes of the meeting, and I determine the date and so on. But unfortunately, I get it after 2 months. So 2 months to get that evidence. So that will create questions about how reliable. Maybe they do some adjustment and amendment into the minutes. Same to the also if I request some confirmation from the or some accounting documents about the inventory or something, if it come within short time, then it is more reliable. If delay, then it is not reliable. Okay, so now let's talk about relationship among the audit evidence and persuasiveness. So in the right side of the table, we have the audit evidence decision, and in the left side, we have the qualities affecting persuasiveness of evidence. So, as we mentioned earlier, the um the appropriateness, we have relevance and reliability, and in the left side we have the audit decision. The first one is about the procedure, the type of audit procedures, and timing. We have two decisions here about the procedures and the timing, and it is more related to the appropriateness, relevance, reliability, independence provider, effectiveness of internal control, auditor direct knowledge, qualifications of provider, objectivity of evidence, and timeliness. When the procedures are performed or portion of the period being audited. So in this, what we need to understand here, the link between the two decision, which is the audit procedures, the type of audit procedures, and the timing of it is related to the appropriateness. Okay, whereby the sampling size decision and the type of items to select is related to the sufficiency. So sufficiency which is quite logic, at the adequate sample size and the selecting of proper population item. So that is sufficiency. Okay. So we need to bear in mind, we need to keep in mind that we cannot just look into the persuasiveness of evidence without having in mind the cost, because the more persuasive is the evidence, the more cost we need. Because just now we mentioned about the persuasiveness include reliability, and include also the relevance, isn't it? And sufficiency. So the more evidence we collect, the more cost we occur. So the auditor need, let's say, because the type of the more reliable is to call or to collect confirmation from the suppliers and customers, more sample. So that will create cost. So the auditor need to consider the cost when they evaluating the persuasiveness. How to manage between the cost and persuasiveness, that is up to the experience and the auditor judgment. In making decision about evidence for giving audit, both persuasiveness and cost must be considered. Auditor's goal is to obtain sufficient amount of appropriate evidence at the lowest total cost. Okay, so this diagram is explaining the relationship, a broader relationship between what we discussed just now in terms of the type of the evidence and from where we collect the evidence. So the audit evidence, first, it comes from broad guidelines concerning the auditor qualification and conducting evidence, accumulating and reporting. So that's collect and shape the audit accumulation, audit evidence accumulation. And the audit type of evidence, in the right side we have broad categories of evidence available for the auditor's accumulation, but in the left side we have the type of the 8 type of the audit evidence, which we will discuss in the next slide. We will discuss it one by one. So, and this one will shape the audit procedures and the sample size, and item to select, and time of test. And this one we can call the specific instruction for the accumulation of type of evidence. And this one, the 3 audit procedures or type of audit procedures: sample size, item to select, timing of test. This is the 4 audit evidence decision, which we discussed in the beginning of this topic. Okay, type of audit evidence, as we mentioned, physical examination, confirmation, analytical procedures, inquiries of client, recalculation, reperformance, observation, and lastly, documentations. So we will go one by one. Physical examination normally, usually it is about inspecting or counting by the auditor for tangible assets. And most probably it's about inventory and cash, and sometime about the assets like machines, cars, buildings, and so on. The auditor, but the auditor normally will not go to check that. Normally they will prefer, let's say if they mention about having a building, so we will prefer to do documentation, to go and check the ownership certificate of the land and so on. But for the inventory auditor, the inventory and cash, auditor will involve in physical examination. Reason, because cash and inventory, it is easy to stall. They can thief it and steal it. And also cash and inventory, it's also related to the business, the operational business, which expected to have more fraudulent in and need to conform the existing of it. Okay, so next is the confirmation. So when we see confirmation, we have two types of confirmation. One is to confirm the assets. Next is to confirm the liabilities. So remember when we discussed in the previous chapter about the management assertions in about the financial statement, one of the assertions is about the assets. They assert that they own this cash. They assess that they own some credits with the customers. So customers own the client company, and they assets, they claim that they have notes receivable. They claim they have account receivable with this amount with customers. They assert and claim the ownership of inventory out of consignment, inventory held in public warehouse if they didn't use their own house. Also cash surrender value of life insurance and so on. So how to confirm? We need to go in the right, in the left side we have the assets, and in the right side, in the right square, we have the source. So to confirm those assets, we need to go back to the left side, to the right side to confirm. So cash in bank, we need to acquire confirmation from the bank. Account receivable, we need to get confirmation letter or oral call from from customers. Note receivable, we need to check the mark, the maker of the note receivable, which normally is stated in the notes. Okay, the same thing about the liabilities. We have the account payable, notes payable, advance from customers, mortgages payable, and bonds payable. So we need to check with the resources. We need to get confirmation from sources, creditors, lenders, customers, mortgagor, and bondholder. So we need to confirm from those guys. But bear in mind, if let's say we have creditors, we have thousands of suppliers, so we cannot go to get each one of it, each one of those suppliers. What normally in the practice happen, we normally start to select through sampling. First, which item to select. Let's say we have uh, creditors with big creditors. So those, maybe if they are 5 or 10, we may require to call the creditors or ask for them without involve them in sampling. For the rest of the creditors, we will go for sampling. Okay, and next is the owner's equity. If we are public companies, then we have shares outstanding. Means we have shares that not yet registered. Sorry, not yet collected. So we need to check with the sources, which is the registrar and transfer agent. Other information like insurance coverage, contingent liabilities. Contingent liabilities means future liabilities that may happen related to the, let's say, business conflict with other business parties. Bond in indentures agreement, collateral held by creditors and so on. So we need to confirmation. We need to know what is this, what is the item that we need to acquire to ensure that is exists. So we need to see who is the source of this, either the assets or the liabilities or owner equity. So we need to refer to the source, and then we send confirmation, a request of confirmation. And remember, we need to bear in mind the materiality. We will consider only the material amount and transaction to proceed to collect evidence. It's not worth it to send or to include less amount or amount with, let's say, 10 ringgit transaction or even 100 ringgit transaction to get confirmation. It's better to go for the material transaction. And when we say material, means significant amount that may affect the financial statement. Next, number 3 is the analytical procedures. Analytical procedures, we explained in the earlier, we discussed that analytical procedures is about financial analysis using either financial or non-financial information to give us or to give the auditor some indicators. And normally we use some information about the industry, about the competitors, about the financial statement of previous years, and as well for the current operation financial statements. So understanding the client, industry, and business. Assess the entity's ability to continue as going concern. So we check the whether this company or the entity is going concern or it's able to continue business. Number 3 is indicate the presence of possible misstatement in the financial statement. So we try to find indicators through the financial statement ratios and so on. Reduce the details audit test. How it will reduce the details audit test? Sometime by doing some analytical procedures, we may find that there is no need to go and go in details for this area or this branch or this account, due to that we already found that we have some indicators that there is no misstatement in this side or this account. In acquiring of client, it is about obtaining written or oral information from the client in response to the questions from the auditor. Either sometime call or go and meet in person, and sometime distribute questionnaires and questionnaire surveys, or even sometime email they will reply. So it is about inquiring information from the client, asking them about some doubt or some questions that the auditor need to answer. So that will be one of the evidence. So their answer, it is evidence. For sure, rating written inquiries is better than oral. Okay, for documentation. Number 5 is recalculation. It's normal recalculation involving rechecking a sample of collection uh, or calculation made by the client. So let's say in the financial statement or the ledger, we have a list of account, let's say under the account payable. So and they have the title end of the list. So we recalculate to ensure the accuracy of the calculation. And I believe this one now is no more uh, valid evidence, even though we still some company they do it manually. But since the computer or the accounting software is doing the calculation, so no need for that. And most probably it is about human error, key in and so on. But now with the system, with the internal IT controls, it will avoid such human errors related to the related to the calculation. Number 6 is about reperformance. It is about that the auditor independently try to test what client account procedures or control that were originally done. So there is one transaction the client already done. So let's say the client record that in the system that they already collect 5,000 from the customer. So what the auditor will do will try to reperform that transaction. And from normally we do reperformance to test the client internal control to ensure that the internal control is effective and accurately operated. Okay, number 7 is observation. It is about that the auditor come and try to observe the process and operation of the company. So they use the sense to assess the client activities. Auditor may go for tour to the plant to obtain general impression of the client facilities. So let's say the auditor will, especially this one, if it is happen with new client, the auditor will do some visit, maybe to the office side, go to the client warehouse to check how secure it is, and check how about the locks, the CCTVs, and so on. All of that is kind of checking whether they are concerning about the security and internal control of the system. Lastly, it's about the documentations. So the auditor will also can collect documents, and these documents, it's the auditor will inspect the client documents, which is either internal documents or external documents. Internal documents means provided and issued by the client itself. Uh, but if it is external documents, means it comes from related business party, means either from the bank, from the lawyer, from the government, from the suppliers, from customers. So invoice from suppliers is more reliable compared to the let's say the record in the account payable of the of the client system, accounting system. Okay, so in general, this is the evidence, and this is the terms we use and type of evidence. So examining the documentations, scanning analytical procedures, read documentations, compute analytical procedures, recompute recalculation, voting recalculation, means we have the list of accounts and we recalculate. And trees, we try to check the documentations and Reperformance, and then compare documentations, the count physical examination. If we go and check the cash in the with the cashier, then it's about counting. And observation, inquire, of client, and then finally is watching the documentation. So here we can see that most of the terms will be it's related to the documentations, which is quite important because we have to rely on more documents rather than the physical examination, because physical examination is more costly. We will discuss now reliability of evidence based on procedures. And so the the red color is more reliable, which is the physical examination and Reperformance. And then the yellow color is less reliable. It's medium level of reliability, which is the documentation, confirmation, analytical procedures, whereby the lower, which is the green color, the lower reliable evidence is the inquiring of client, person, or management, and the observation. What we can notice here, that the more reliable is the evidence, is the more costly, the more involvement of the auditor. So physical examinations require auditor to be in the side. Reperformance also required the auditor to be in the side of the company and redo some performance. But medium evidence, which is documentation, confirmation, analytical procedures, it is about, yeah, we collect something, we involve, but we are getting something from the ready. We get ready documents either from the client, our client, company, or from the other parties. Confirmations and analytical procedures. The lowest is about asking questions and observe. So there is less involvement and less cost occurred with these two types of evidence. Okay. Now, since we discuss that, if you notice when we discuss the terms, sorry, if we notice we discussed the terms just now, we have a few several terms related to the documentations. In terms of audit evidence, we have the scan, we have also the inspect, we have the read, we have also the compare, and so on. So now we will discuss something related to the documentations, but it's in the side of the auditor company, not the side of the client. So students need to differentiate between documentations evidence and audit documentation. Documentation evidence is about the auditor collect evidence in terms of documents that help the auditor to shape their opinion, whereby the audit documentations is the documents that the auditor use in the auditing process. So we will discuss now the audit documentations. So what is the audit documentations? Audit documentations is the principal record of auditing procedures, applied, evidence obtained, and conclusion reached by the auditor in the engagement. Okay, so we will discuss three main issues related to the audit documentations. One is the purpose of audit documentation, why we need to have proper audit documentations of the auditor work. And next, we need to know who is the owners of the audit files that the auditor keep the documents. Third is the confidentiality of the audit files. Okay, so we start with the audit document. So based on ISA 230, documentations of work done and evidence accumulated in supporting the opinion in auditor report, and according to Sabin Oxley, they require auditors for public companies to prepare and maintain audit work paper for the period of not less than 7 years, whereby the IFAC according to ISA, they require 5 years to maintain the audit documents about the client for 5 years. And in the case of Malaysia, MIA require as well 5 years. Okay, the audit documentations. Why we collect? Why we need? What is the purpose of the having audit documentations? It will help the planning and performance of audit. So contain evidence that documents auditors work complied with the auditing standards. So it will assess the audit team in their performance, and it will assess the planning for the and preparing the audit program, especially for the following and sequence years. Number two, assess the supervision and review of audit work. So if when we normally when the auditor if you remember in I think in chapter 1, if I'm not mistaken, that we have the category of junior auditor, and we have the senior auditor, and we have the manager, and we have the partner. So this sequence or hierarchy of positions, they need to supervise the one who is under their responsibility. So let's say the manager or the partner team or the team leader of the auditing work, audit team, they need to supervise and review the work of their team. So they will supervise and review based on the audit the working papers or the audit documentation. Okay. Then number 3, provide supporting evidence to the opinion of audit report. So if the auditor come out with, let's say, opinion, either negative or positive opinion, then they need to have supporting evidence. Why? They will ask them, why you come to this opinion or to this conclusion. So he has the or she has the working papers that can support his stand. Okay, then what is the importance of working papers? We mentioned just now, but this is in different way. It helps the planning. It helps recording of evidence accumulated. It will help the support proper type of audit report. Means it support the audit type of audit report. And then lastly, it's basis for review by managers or partner, the point that I mentioned. So this is just this is the important, and that one is the purpose, but it both are serving the same thing. Okay, we have 2 types of working papers. One is the permanent file. Permanent file is the file that contains relatively permanent information. File for occasional references means we are not using it in the day-to-day work or day-to-day operation and procedures, mostly to better understand the background of the client company. Okay, so it means it includes something related to the client background, about the industry, about the let's say the engagement letter, and so on. We will discuss that in details in a short while. Then the current file. Current file is contains documents and records pertaining to the current audit. It means it is day-to-day working papers. Sorry. Okay. Example of what contained in the permanent file. This is according to ISA 230. It contained organizational structure or the chart, memorandum of association, an article of association with the client, long-term contract, minutes of meetings, law of and regulations, especially, let's say, remember we discussed in the class that we have um, amendment the new Company Act 2016, that may be one of the regulation that should be included in the permanent file, especially uh, in the years following the issuance of the Company Act. Then we have internal control procedures of the client. Past and historical financial performance means for the previous financial statement, let's say for the last 5 years, financial statement should be in the permanent file. And then information about the industry, business environment, crucial and relevant. Okay, so that information should be in the permanent file, and we say that the permanent file we are not visit it and use it in a regular manner, whereby the current file, the content is analysis of transactions related to the balance, analytical procedures, the nature and time extent of audit procedures. So what and the performed and result. So what time, what is the nature of the audit procedures we will do for each, let's say, audit evidence or audit procedures that we are doing, and as well the audit the evidence of work checked by supervisors. So let's say we will have a list of schedule, uh, let's say visit, do some checking the account receivable. Uh, so you need to who do it, the one who do it, and the one who supervise this, and the way they do it, and the time. All of this will be in one table to just scheduling the audit procedures and audit evidence collection. Then indication for person who performed the audit, I mentioned this, and then the conclusion drawing or the exception or unusual matters, how to resolve or how to treat. So let's say we found the auditor or the one who conduct that audit procedure, that particular audit procedures, found that there is unmatching or unexpected findings. So they need to report it, and they need also to mention what they should do, for sure with the consultation with the senior auditor if they are junior or less experienced. And finally is the copy of financial statement and audit report in the end of the audit auditing process. Bear in mind also we will have the other documents. This one is kind of only examples. We also will have financial statement and report as in these files, working trial balance, adjusting the journal entries, contingent liabilities, operations, liabilities and equity assets, analytical procedures, test of control and substantive test, internal control, general information audit program, and permanent file. So this is all general, but if you notice this one, permanent file, audit program, general information, internal control, and test of control, all of this are in one side in the permanent file, whereby the rest of this in the upper side is in the current file. So we still within the current file. Let's talk about the various working papers and their connection. So audit programs, as we said, it is planning of the audit procedures. And when we say audit planning, then it come to the mind three things: the time that we should spend, and the effort that we should give, and as well the type of evidence, or the type of audit procedure that we should do for to achieve one of particular audit objectives. And then we have working trial balance. Working trial balance, we will discuss it in short while. It is the trial balance that the client provide or issue, with extra of some columns that we will add if there is any adjustment or mistake, reclassifying some figures. So that is the trial balance or working trial balance. Lead schedule, audit memorandum, adjustment, reclassifications, entries. So let's go first for the working trial balance. And ordinary trial balance, but with extra columns that the auditor will include. Normally, we will include one column for adjustment or correction if we find that, let's say, we run some test for the transaction, substantive test of transaction, and we found that it is incorrect. So it will reflect into the general ledger, subsidiary ledger and general ledger. And let's say it is in the account receivable balance, that will be it should be adjusted in the trial balance. Um, the other one is about reclassification of account balance. So let's say it's wrongly reclassified. It should be recorded uh, let's say account receivable, but it recorded as cash. So they need to the auditor will include this adjustment into the working trial balance. Then we have leadings and support schedules. It contains the calculation, and it contains the lead. Is the primary schedule contain the page of the account balance, and this is one of example of lead schedule. If we see here, we have the item. Here we have the item for, let's say, item that we extract from the financial statement or the accounts of the customers or the client. And this is the adjustment, reclassifications, and the final balance after we do the adjustment. And if it is about original budget or the pre period balance and so on. Okay, so type of supporting schedules: we have analysis, we have trial balance or loss, we have reconciliation of amount, we have test of reasonableness. Reasonableness. Sorry. Okay. Type of support: also we have summary of procedures, we have examination of supporting documents, informational about those who are doing the audit, as well as the outside documentations. Audit memorandum, it contains written description of something like we have this list of the as per ledger. This is the amount in the green, dark green. We have 260 as per ledger, which is extracted from the ledger of the inventory. And we have the adjustment. We after we run the audit, we found that it should be less by 7,800, and the adjustment balance is this one. is 252 200. So this is the memorandum. We explain what we found. Inventory count performed on the 20th of December 2014 revealed that 5% of the inventory was absolute, hence observed overstated. So we come to the we describe what we find. So that is what we call audit memorandum. We describe the finding of the audit. So we describe why we reduced the 5%. So it is due to the overstated the inventory by 5%. Other information in audit memorandum: copy of the contracts, extract from minutes of meetings, explanatory letters from the management. This one, we, if you remember, we collected from the inquiring of the client, either or staff or managers, then later from external parties, either bank or lawyers and so on. That all will be included in the information of audit memorandum. And remember, this one will be in the permanent file. What is the format of an organization of the working papers? It should be first heading, and when we say heading, mean headed by the uh, the audit firm name. So it belong to the company, to the client company, to, sorry, it belong to the audit firm company. So they need to have head letter of all of their documents, and they need to have indexing. Indexing means, let's say, if you notice, if you open any textbook, you will see in the end of each book, they will have what we call the indexing. This indexing, it will help to explain or definition of some terms that may not be clear to the readers of that textbook. Similar things, same functions. Indexing, it helps to explain some terms that used in the working papers of the audit process. Cross-reference. Cross-reference means the auditor need to use cross-reference for either numbering or letters or mix, alphabet and so on. They need to do some cross-reference between the documents that they do or the reference they do. Let's say we have, I will give example in a short while in the next slide. Then next is separators. Located in separate sections. So let's say we have the financial statement and we have the working trial balance should have separators. We also have audit text, means done. The auditor should click or sometimes they stamp as done and so on. It's up to the audit team. And then responsibilities or the initials means it should include the person who are preparing that working papers. Okay, this example of one of the trial balance documents, if you notice, we have here with the red color is the reference that will help to refer. Let's say if you say A, it's about property, means you come to the other working trial balance, you will find that a property is here and so on. So let's say in this side you have the reference here and you have this tick. This tick, it shows that it's overestimated. So it should be up to be this amount. Sorry, is underestimated, so should be increased to 96 1,342. What is the reference of this? The reference of AA/1/G, it is here. So you can refer to this. Sorry, you can refer AA means here, A, and then also G, AA/G/1. So AA/G/1, it will help to understand the where you get this changes and amendment. Okay. So this is another example. You can see the same this example also from the textbook. So if you notice here, we have property petty cash, we have A2 cash account sheet, and we have bank reconciliation. We have reference also for A1 for lead schedule cash, and it include all of the accounts here. And let's say you try to get confirmation from the customer. So this one will be A/4.1. A/4.1, you get this, it is related to payroll, means it is about the confirmation you collect. It's about the suppliers related to this amount. Okay, so bank reconciliation A4, it is about also the amount that you pay to the you need to check also the payment to the suppliers. Okay, bank reconciliation also can refer to the general cash in the bank, and cash account sheets also is about the BT cash, and so on. Okay, and so on. It is about referencing. Okay, the preparation of audit documentations. Each audit file should be properly identified. Documentation should be indexed and cross-referenced, as we mentioned. Completed documentation must be clear and indicate the auditor work performed, the audit work performed. As well, it should include sufficient information. It should plainly stated the conclusion reached by the work. Okay, so describe. This is the last point that we will discuss in this chapter. It's about how the e-commerce will affect the audit evidence. What we mean e-commerce mean the online shopping, online transfer, and so on, online payment, and so on. All of this transactions is under e-commerce. So how it will affect the audit evidence or audit documentations. So audit evidence is increasingly in electronic and computer form. Auditor must evaluate how electronic information affect their ability to gather the evidence. Auditor use computer to read and examine the evidence, and there are softwares programs are typically Windows based, which can help the auditor to evaluate the e-commerce evidence. This is an example. So finally, the final issues that we will mention about the ownership of working papers. Property of audit, it is the property of audit firm for sure. Since the Sarbanes-Oxley's, the ISA, they mentioned that the auditor firm should maintain those documentations for 5 years or 7 years. So it includes documents prepared by the client at the auditor's request. So the original documents should be returned to the client company, let's say the ownership certificate and so on, but the copy can be kept with the auditor. But bear in mind that it should be confident, kept, and not shared with competitors. And if there is any negative harm and affect the client may claim uh, compensation and claim go to the court to sue the auditor for sharing such sensitive information about or documents about the client. Okay, so this one what we mentioned is just kind of summarizing. I think that's all for today. سبحانك اللهم وبحمدك نستغفرك اللهم ونتوب إليك.